Hi guys and welcome to Mentor Me's YouTube channel. My name is Aravindan. I'm a CFA charter holder and this is a three-part series which we made on IPO. And in this video we're going to be talking about specifically about what is an IPO and what is the entire process of launch of an IPO and why do businesses actually go public, right? So hang on and enjoy the video. Now, of course, these days there's a big euphoria on initial public offering, and people are talking about Zomato IPO. But have you ever considered the fact on why does company actually go public, right? So what I've done is I've tried to explain this in a very simple manner, possibly which you can relate to. Think of yourself as starting a very small idea or a business idea that you have generated, right? And of course you started off in your own whole house or in your room, right? And slowly the business idea becomes serious in about 5 to 8 years if you manage to hang around till then. And at that point in time, of course, during this period of you working on your business idea, of course the need for capital keeps on increasing, right? And you've got to hire more people, you've got to hire more process, you've got to invest in infrastructure. All these are expenses which are incurred, right? And depending upon how the business has been performing during this time, there would arise a need to obviously add small partners, right? So from initial level wherein you were putting in your small capital that you had to all the way up to becoming a serious business, a profitable business, a business which is expanding, a business which can be grown into a larger space, like for example Facebook. All these are companies which have become pretty large. And after that, after putting in so much effort, the final stage of expansion, or in terms of growing the business, actually goes into cashing out the business, right? Now you might be wondering why I'm saying cashing out and I'm not saying the actual use of capital in the business, because 99% of the time, and I will prove you with data, that the reason why companies actually go public is not to add more capital in the business, because they've already grown and the business has already been there for 10 years, right? So if they needed the capital, they would have already gotten the capital, right? But the actual reason of going public is for all these years that you've put in the effort of growing this business, taking the pain, there has to be some returns for the entrepreneur or the investors who have taken the risk. And that is the reason why a lot of companies actually go public, right? So you have to be very careful with this euphoria around on initial public offering. And in the three-part series, you will also realize that in each and every series I talk about the actual data. Okay, this, I'm not talking about the euphoria. I will actually prove you with data on the actual performance of IPO versus what people usually think, right? So let's get started to the next part. So if you look at this slide, you will clearly understand why I mean to say cash out, right? When do IPOs come, right? IPOs do not come during market, when the market is very, not exciting, or probably when the markets are not giving very high returns. When are IPOs finally coming? So if you see in this slide, you will realize that the highest number of IPOs were actually in 2007, right? Because 2007 was the time when the markets were roaring like anything, right? The market prices, the stock prices were going. And if you remember, just 1 year after that, what happened? There was the 2008 crisis, right? Now if you see, 2010 also was the time when a lot of IPOs came up, right? Now I've marked these green periods because these are the periods when there was a lot of European IPOs and there were very less successful IPOs, which are marked in red. So if you clearly understand the reason why a lot of companies will go public at specific time is just to cash out the maximum which is possible. Okay, nobody will, and very few companies will actually go public when the markets are not performing well. So if you see in 2020 and 19 also, there were not many IPOs, right? Whereas the market was doing okay, right? But if you see in 2017 there were a lot of IPOs, and in 2021 when Nifty is at record highs, that is the best time for an entrepreneur to cash out on the wealth creation finally, right? Now, why do I say wealth creation? Because you see, when you are an entrepreneur and you've been taking private funding, you don't, I mean, for an entrepreneur, the wealth as opposed to what people think is the profit or the cash flow which is getting generated in the business. But the mega returns or the mega wealth which is created is when the valuations increase, right? So the valuations of the business, if it increases, then the actual wealth gets created for the entrepreneur. So you have to be very careful in understanding why IPOs are launched. Okay, and now let's talk about process of IPO launch, right? So what I've done is I've taken the example of Zomato itself to explain you that how does this entire thing actually ended up till here, right? So if you look at the stages of the company, right, the idea stage when just Zomato was just formed in 2008, right? It was a bad time to actually start, but it was started by in the name of a company called as Foodie Bay, right? After that, in 2010, they formed the company into something called as Zomato, right? After 2010 and between 2010 and 13 is where they actually received the first seed fund, and the seed fund they received was from Info Edge, right? And at that time, if you realize, the valuation of the company was about 14 crores, right? Now you will see that there has been so much funding in Zomato across periods, right? Now you will realize that at every stage of new funding, the valuation increases. Why does that happen? That happens because the previous investor which gave you the seed fund would now be expecting that the other person who's coming in should be coming at an expensive rate, right? So if you see in 2013, the valuation jumped from 14 cr to 999 cr. Now you might say that it's because of the business growing. No, not necessarily. Valuations are finally a very subjective matter. It depends upon the future prospects of the companies and as well as profitability. Now at this point in time, the company has never been profitable, right? But still the valuation has gone to 999 crores, right? And that is where the investor adds a lot of value even for the entrepreneurs, because the investor finds another investor, right? Now if you see in 2015, they've already gone from series seed funding all the way up to series G funding in 2015, in which their valuation touched almost 6,351 crores, right? So there is another 60 million, right? Again 2018 they've raised another 50 million. The valuation has gone from 6351 to 6620, right? And just before the IPO, now look at this is very interesting, right? Because 6620 crores valuation 2018, look at what happens to the valuation 2020. This is the pre IPO funding that happens, that is also called as series J funding, right? So that's almost what 2008 to 2018 is already 10 years. So about 12 years the business has been operation, and the fundings are still going on. Finally the valuation reaches to about 22,849 crores, right? So from 6,000 crores all the way up to if you look at the numbers, 22,849 crores. And at the IPO date, the valuation has touched 38,690 crores, right? So this is the entire journey of an IPO. So you have to understand why the IPO is actually there. It's there for wealth creation for the entrepreneurs and for other investors. In fact, if you look at the stakes of the original founders, it's about 5% and 1.6%. And the majority stake had already been sold in 2012 and 13. So these are the various stages from the growth of the company and from the funding point of view on how the IPO day finally comes, right? Now, how does the IPO listing actually happen, right? So it's a very simple process. Once you've raised the investors, once you've raised the money and you've reached till series C or series D or series J funding like Zomato, right? In Zomato's case also, if you realize, there are about 5 to 6 investment banks which were hired, right? So now they are given the task of doing the entire listing process, for which they get the commission, right? So the commission that in this case they gave almost 293 crores of the 9,360 crores that was offered for sale, right? And that's about 3%, right? So in return for the 3%, the investment banks like Credit Suisse, Morgan Stanley, Kotak Mahindra Bank will do the entire process of making this IPO successful, right? So after the investment banks or the merchant banks are hired, then there's the registration process of IPO, which is done with SEBI. Then there is the verification done by SEBI. Now you have to meet a lot of rules and regulations, based on how many years the business has been, and there are some statutory rules which you have to follow, right? Then you apply to the stock exchange like NSE or BSE, wherever you want to get it listed, right? And then there is the process of marketing, right? So almost 1.5 year, the buzz was created for the Zomato IPO being, which is on the way. So it creates that excitement in the investors, so that they pre-plan and they try to gauge the response whether the investors are actually going to subscribe to this IPO or not. So it's a very scientific process. It's just pure marketing, right? Then comes obviously the day when the merchant bankers, the investment bankers will decide on the sale price. Right? Remember, the entire company is not sold for or is not actually offered for sale in the IPO. Okay, it will be, in this case it was just 10%, right? Then there are two ways of pricing. One is that you just decide on a fixed price, that this is the price at which the IPO is going to get launched. Or the other way is obviously to decide on a band, right? Now generally companies will prefer band, so that they come to know at what is the best price they are able to get, right? In case of Zomato, it was a band price, a flexible price between 72 rupees and 76 rupees, right? And then obviously a lot of the entire broker network which is there in the entire country is used to get the registrations or the bidding process started. The bidding process will stay somewhere between 3 to 5 days, in which you can actually put up your bidding request, your price, whatever you want to bid at, and based on the final cutoff price, which is decided by the banks, the investment banks. If you have bid higher than that, then you get the shares. If you don't, then you do not, right? So that's the entire IPO listing process. And I also told you the intent behind the listing of IPO, right? Hey, if you're liking the content, please do subscribe to the channel to stay updated with newer content. There's a video coming up every week. Thank you.